They say Wall Street is a fortress, a citadel of money and power, guarded by suits, lawyers, and algorithms no outsider could ever hope to crack. But in the summer of 2009, a teenager sitting in a dimly lit bedroom thousands of miles away managed to find a door no one else could see. His name was never meant to be remembered. He wasn't a billionaire hedge fund manager or a CEO giving speeches to cameras. He was just a kid, a second-hand laptop, a spotty internet connection, and the curiosity to ask a dangerous question. What if Wall Street wasn't as smart as it pretended to be? At first, it was a game. Began poking around trading platforms, reading obscure footnotes buried in financial reports, and teaching himself how orders were processed. While most kids his age were trading baseball cards or gaming consoles, he was trading simulations of stocks he didn't own. Then, he found it. A loophole, small, almost invisible. A flaw so technical, most professionals missed it. But to him, it was like finding a crack in the wall of a skyscraper. By placing certain trades in a specific sequence, he realized he could predict and profit off Wall Street's movements before they happened. It was legal, technically, but it wasn't supposed to be possible. For weeks he tested it, slowly, cautiously. He watched digital numbers grow in ways no high schooler should ever witness. From a bedroom cluttered with school books and posters, he was quietly siphoning knowledge and money from the beating heart of global finance. The strange thing? He didn't seem motivated by greed. Friends later recalled he was obsessed, almost haunted. He spoke about the system like a magician revealing a trick. He wanted to prove that the markets, this towering machine worshipped as infallible, could be undone by a teenager with enough patience and imagination. But Wall Street is not kind to those who make it look foolish. The more he pushed, the more attention he drew. Brokers began to whisper about unusual trades. Algorithms flagged anomalies. And somewhere, in a New York office filled with glowing monitors, a red light blinked. The system had noticed. By the time regulators knocked on his door, the boy was trembling. Not because of money lost or gained, but because he suddenly realized the scale of what he had touched. In one recorded interview, later sealed from public release, he admitted, "It felt like playing chess against a machine that didn't know it could lose." The punishment came fast. Not prison, not at first, but something worse in a way. Silence, lawsuits, settlements, non-disclosure agreements. His story erased as if it had never happened. Friends stopped hearing from him. Teachers avoided mentioning his name. Wall Street had protected its image, and the boy who cracked it disappeared. Yet fragments of his legacy remain. Financial historians whisper about the mysterious teen loophole, buried deep in regulatory reform a few years later. Traders speculate about the anomaly patched overnight. And in online forums, anonymous users still share theories about the kid who saw the market's secret and paid the price. What does it mean that a teenager could undo what billions of dollars in computing power could not? Maybe it tells us that the system isn't invincible. That intelligence doesn't always wear a suit. That sometimes the sharpest minds grow in the quiet corners of bedrooms, not in skyscrapers. Or maybe it's a cautionary tale. That curiosity, when aimed at powerful systems, is never free. The truth is, we may never know his full story. His name is buried, his record sealed. But somewhere perhaps that boy is grown now, watching markets he once outsmarted and remembering a time when, for a brief moment, Wall Street blinked. And maybe that's why his story matters. Not because of the money, not because of the loophole, but because it reminds us that behind the algorithms and numbers, the myths and the money, the system is still human, fallible, breakable. And sometimes, it takes a kid to remind us of that.